Hey guys, and happy Sunday. This Sunday is particular for me because, I turned 35 today. Yeah, July 24th is the day I was born, 35 years ago. And the funny thing about it, guys, is this morning when I woke up, I really thought that I was 34 years old. And I mean, it's just funny how I'm thinking about it. So, yeah, thanks for all the wishes, coming from the comment section below. And let's start again with, as usual, what's going to happen next week in order to prepare for this week, because I do believe it's going to be a critical week. Critical not in the sense of bad or necessarily crash, but critical in the sense of what is going to be the stage, or what going to be how the next 6 months are going to look like coming out of this week, because we have not only a busy week coming from earnings from big companies from an array of sectors, big tech, food industry, retail, oil companies, energy. I mean, you just name it. But on top of that, we have the FOMC meeting. Whenever we hear FOMC meeting, it sounds like alarm. People are in conservative or kind of bearish mode, because since the last 8 months, whenever the Fed will do something or say something, it will tend not to be in the favor of people willing to buy stocks. So let's see exactly, how things may change for this coming week. So, looking at the main economic indicators, we have the FOMC, but definitely the second quarter GDP reading coming, and potentially, some data from the housing market that may give us another hint into whether or not we're going into a recession, because a lot of people are calling on to a hard crash coming for the real estate market. Now, on top of the FOMC meeting, one of the major things to look for this week is going to be the GDP. The advanced estimate for second quarter US GDP growth will be released on Thursday. Why this is definitely one of the big things to look in this market? Because we've been hearing on recession fears for the last 6 months. And based on these recession fears, we had a lot of big companies. Apple said they're freezing hires. Google and Amazon, I think, are kind of the same, step, if they're not laying people off. But definitely, in the crypto space, the high growth space, a bunch of companies, a bunch of, key players in the market, Coinbase, Tesla, they laid off people because, they are willing to kind of prepare a little bit for the coming recession. So that doesn't help into building confidence into the market on, the coming recession. Now, inflation is still high. The last CPI data where we came from the month of June definitely shows that, the housing market is cooling a little bit, but the expectation is, if this GDP, which is a measure of the value added to the entire economy, for all sectors, both from a product standpoint and a sector standpoint, if that comes and it's a little bit less than what the market expects, then we are definitely and officially be in a recession. But a lot of people, from Cathy Wood to, big billionaires, tech billionaires, crypto billionaires, Elon Musk, one of those, saying that the economy is already in recession. So if this number from the US GDP comes on Thursday and, is confirming that we are in a recession, I think a lot of this expectation was already built into stock market, crypto markets, maybe not the housing market, but definitely stocks and crypto. Now, what may actually be something, kind of balancing this will be two things. The Federal Reserve meeting, because they are meeting again for the month of July, but the next time they're going to meet is going to be in September. So for the month of August, we're not going to have a meeting. So it's going to give a little bit of kind of breathing room to the market. And I do believe that a lot of expectations here are coming from the fact that, because we had the CPI data in June being high and higher, very hot, 9.1%, people were under the impression that, or expecting, the US Central Bank to go really hawkish, like aggressive, go banana mode, and people were talking about, throwing numbers like 100 basis points just in one meeting for the month of July, or maybe 150 or maybe 125. Some people say, let's just rip the band-aid off and just go with, maybe 175 basis points, and that's it. But I think, and this is something I mentioned last a week and a week before, and for some time now, for the last 3 weeks, if you look at the major components of inflation, energy being a big part of that. So oil and gas have been cooling off a lot since June. So the market, and definitely the US Central Bank, looking at that, may not be as aggressive, even though they stick to the 75 basis points for July. I think for September, they may come and say, you know what? Maybe we're going to do 25, or maybe we're not going to do anything, because we have now confirmation and facts coming from the CPI, the PPI, that, and the PMI, and China reopening, and supply chain issues being a lot more better, that, hey, this inflation thing is cooling off by itself. So we don't need to do, a lot of what we've been doing now to bring it down, because the market is kind of repricing itself. Prices are kind of rebalancing itself on its own based on law of supply and demand, and supply chain issues, getting a lot more better. So that may, in case we have GDP numbers being, bad, counter effect this, because it's going to give, definitely the market's going to cheer up on these news. And then the last thing is going to be one of the busiest earnings week. So we have big tech, including Apple, Amazon, Microsoft, and Google parent Alphabet, plus Facebook Meta platforms reporting earnings. Now, this is going to be one of the most highlighted earnings. Why? Because not only these big techs already are expected to have a significant, slowdown in earnings, in revenues, not much from a cost maintaining perspective, but from a revenue perspective. But because they also gave some kind of heads up a couple of months ago, I think a lot of expectations already built into, maybe not being blasting better good earnings, but I think we may have some surprises. And by surprises, I mean we may have, some earnings of some companies telling us, yeah, you know what, things are not as bad as we thought. Same thing happened with Tesla. Same thing happened with, Netflix. So because this is big tech, because big tech is really those that are kind of bearish a lot, definitely the market would share on this. But we also have a bunch of other companies from every other sector. We have, UPS definitely will give us a hint into how supply chain issues are going. That will be on Tuesday. And then we have food companies, Coca-Cola, McDonald's, we have the energy companies like Exxon that are going to release earnings. We have Valero Energy. We have, I mentioned Exxon on Friday. So a lot of these are going to, and Chevron are going to tell us a lot into, how things are going from that point. And then we're going to have, also from a consumer standpoint, like Procter & Gamble, like Colgate, Palmolive, like Texas Instruments, all of these companies are going to tell us exactly how things are going from a consumer standpoint. So bunch of things to come. That's the bottom line. Bunch of things are coming this week. And the only, or the best way to kind of, prepare for it is to, okay, you know what? It's going to be a lot of volatility. There's going to be a lot of movement, because earnings might be, a catalyst. And then, definitely the FOMC meeting we will see maybe some money pulling back, some pullbacks ahead of these. But depending on the decision, we can also see the market sharing up. And definitely, that GDP coming on to Thursday will be another big thing to watch for. So here you have it, folks. When you have the information, when you have the insights, you can be prepared. And the best way to be prepared, whether you want to trade, invest, invest, of course, in day trade, swing trade, is to always have some dry powder. Always have some money, always have some cash sitting. It doesn't matter if you are willing to do that on a weekly, monthly, or maybe a daily basis, especially if you are one of the scalpers. So, because when you have money, it doesn't matter if the market is tanking or crashing or pulling back hard, you do have the ability, you have that capacity to put, and get some great bargains. And But personally, I think we might have some good surprises coming, and maybe get to some new highs for the last month or so. But you just never know, man. So we have just have to wait and see how it plays out.